All right. Hello, everyone. Very nice to have you for today's session of Supercharged as part of Modern Sales Pro's sales conference. My name is Joyce Zangray. I will be the moderator for today's panel on Sales Leader to Investor. Take your sales skill sets to the next level. I'm the founder and CEO of Alariss Global. We're a global expansion platform that helps companies with their go-to-market from anywhere in the world into the US market. And I'm also an angel investor and advisor to many startups, in particular those who are based in the emerging markets and who don't have access to the same network and ecosystem that we might take for granted here in the US, in particular in Silicon Valley, where I'm located. I'm very excited to be joined today by two amazing speakers. We have Mark Roberge, General Partner at Stage 2 Capital, and Brett Queener, General Partner at Bonfire Ventures. And I'll let Mark and Brett give their intros, starting with Mark.
Oh, thank you, Joyce. Sure. So I, like Brett, am operator turned venture capitalist. I actually still kind of describe myself as an entrepreneur. So I started a number of companies through my 20-year career as an operator. The one I'm most known for is HubSpot. I was part of the founding team there, and my role was first salesperson, first sales manager, first VP of sales, founding CRO through the IPO. In fact, that's how Brett and I kind of knew each other from his days in Salesforce. And after that, after the IPO, I was invited to join the faculty at Harvard Business School to build up the sales curriculum and teach that, which was a pretty humbling honor to do. And so I've done that for 9 years now. And about 5 years ago, after doing a decent amount of angel investing and board work and advisor work, was approached by a young investor at Bessemer, Jay Poe, to co-found the first VC fund run and backed by sales leaders, which I thought represented a need in the ecosystem as I sat on boards and saw where various investors and board members were really strong and where the narrative was perhaps a little below par. So that was our inspiration to do that. We're 3 funds in, and about 40 companies, have about 500 CROs, CMOs, CCOs as our backers. The CROs at Zoom, many folks from Salesforce, from SAP, from Oracle, from Twilio, from Snowflake, etc. So happy to share my viewpoint now on the VC side with an entrepreneurial and sales background.
That's fantastic. Well, we have some great questions lined up for Mark, but before we go into that, Brett, would love to hear your background and how you got started how you transitioned from operator to investor.
Yeah, Mark, I wish you had taught those classes like 30 years ago, because I can tell you as an HBS grad of 1997, there was not a single sales class, so I had to learn the hard way. All the classes were, you're now a CEO, what should you do?
As a 28-year-old, exactly.
As a 28-year-old, as Netscape goes public. I'm Brett, a partner at Bonfire. Bonfire is a seed stage firm, got about $1 billion of assets under management. All we do is invest in seed and in software companies, hopefully with recurring revenue. Most of my career has been as an operator, early stage at companies that I was fortunate to pick good ones. I worked for the 2 fastest growing companies in the respective decades. There was a company called Siebel Systems in the 90s, and then was a relatively early executive at Salesforce. And my jobs at Salesforce were various, but initially it really was building out in partnership with a guy named Jim Steele, the go-to-market model, because the go-to-market model did not exist prior to SaaS, and how to build sort of repeatability. And the most interesting thing about SaaS was that if you could sell direct to every segment of a market. Not that we recommend all startups, when Mark and I invest, to do that, but in theory you could, if you got the product, the pricing and packaging, the demand model, and the sales execution side. After Salesforce, I tried my hand joining an early stage pre-revenue company in the recruiting space. That company is now done quite well. And then I transitioned about 4 years ago to being an investor at Bonfire. And as an operator, like Mark, had been an investor in the rest of it and felt that there was a real gap on the go-to-market assistance to provide to founders, especially at the early stage. A lot of founders tend to be very technical, product-oriented, and they tend to look at sales and marketing as some mystical science when I think it's actually not that complicated. And so I've been at Bonfire for about 4+ years.
Great. Well, thank you, Brett and Mark, for those intros. And as both a founder and an investor myself, and a founder, I suppose, who helps other founders with go-to-market, a lot of what you were both saying resonates. And I also remember when I was getting my MBA at Stanford, there was a sales class, but I think it was just one. And I was
it Jim Latin?
Exactly.
Yeah,
So
nice.
it was it's a great sales class, but it's much more, I'd say, theoretical. And when I actually became an operator, I found that there are lots of things that you learn just by doing. So I'm curious, this is a question that goes for both of you. When you're advising founders, how has it been different kind of advising others about their go-to-market versus when you were doing it yourself? You were both part of really fast-growing SaaS companies, and you had to really execute and be market leaders in a space that was really new. How are those experiences different, being that the coach versus the operator?
Mark, why don't you go first? It's the hardest part of the job.
Okay, Brett. Okay.
Hardest part of the job.
Yeah, two things come to mind. One is a pretty big, is it pet rock or pet peeve of mine? I'm not sure which, but I call it the inappropriate cut and paste. And I see it from a lot of any type of board member or advisor, whether it's sales or engineering or even just an investor. And what I mean by that is their advice is rooted from the success of another company without regard of contextual differences between the company in which they observe that success and the company of which they're advising. Okay, so I'll be in these board meetings, and an investor might, a board member might say, we need to go upstream. And their reasoning is because they were on the board at Snowflake 8 years ago, and that's what Snowflake did. And there's not really tremendous regard of the context, right? So this is a big thing that I teach, and a big difference when you're at HubSpot or at Salesforce or Siebel, and you're running a team where your context is relatively static. I mean, yes, you're transitioning through various stages and different competitive changes, but you're still selling this product to this buyer. But as you're on a board and investing, the contextual changes are dramatic. So one thing the way I frame context is three-dimensional, which is what are you selling to who, and what is about your company in terms of its culture, its stage, etc. Right? So obviously, a company that's selling, pencils to elementary schools in Japan is a very different context than a company that's selling jets into the Middle East, from Europe, right? So like everything from the demand generation channel that we choose to the type of salespeople that we're going to want to hire and the way we pay them to the sales playbook that we run is all going to be different. And I don't find a lot of board members, investors, advisors to appreciate that deeply. And it often yields, I think suboptimal guidance from their standpoint. And I guess a related point, Joyce, would be you do have to become multidimensional most of the time, right? Like there's a lot of extremely successful sales leaders out there, but they like kind of know one playbook. They know how to run medic through an outside sales team selling into like a technical team. But that represents like 10% or less of the various contexts that are out there. And so that's kind of a pretty important transition, unless you just want to have that as your thesis. Like we're only investing in companies that are selling, complex products to technical teams, fine. Then you're your playbook's probably right, and that's great. But then you're relatively restricted in terms of the, investment opportunities that you're going to look for. So I'll stop there.
Those are all very good points. Mark, I think as an operator being a venture capitalist, it's tricky because one of the reasons they want to work with a Mark or me is that we can be helpful. The challenge is our job isn't to run these businesses for them. Our job is to ask them the right questions. And if they're any good, they're all in their head, but they're in the muck all day long. So it's hard for them to see the forest through the trees. And so I'd say the one thing that I do love about my job is that I probably talk to 10 to 15 different companies each week. If they give me a couple stats, they give me a couple stories. I tend to be in the Slack groups of all my companies. I see the deal announcements. I see the deal losses. We're not young, Mark and I. We can look at those. We can listen to some chorus calls. And because we're not in the muck, we're able to sort of pull up and ask sort of the right questions. And if you think about at the stage that we invest, we're not growth investors like Mark and I aren't. Like, I'm really good as an advisor. I'm in a couple companies, a couple $100 million in revenue. I'm a genius. Give me a 200-page deck. They have 7 people on the cap table. No one can say anything at the board meeting. As much as I try not to be very direct at the board meeting, I can't not be, but that I can do. At seed stage, there's very little data. And what's most important from seed to A is what we call these learning loops. If you think about what Mark did at HubSpot or did at Salesforce, is they weren't that much later than us. I remember meeting Brian and Dharmesh in the early days. Brian was crazy. I mean, it was great, but it was let's run these experiments. Let's see what works. Oh, that worked. Let's do more. That didn't work. That was dumb. Let's stop doing it. And so the key is with our founders asking the right questions, that they do enough of these loops where they start to find repeatability. And I chuckled at Mark's thing because, somebody in the past 3 years, somebody raised a Series A, like, we're going to go to the moon. And they go hire 20 reps and they hire a sales leader that scaled it at Snowflake. And this company doesn't have any repeatability. And then they're like, oh my God, everybody's sad. We didn't work. We got to cut people. So we're trying to build repeatability, but around that repeatability, we need the founders to go through these learning loops. And the learning loops really are, this is where having a sales back.
I think we could cut that, Joyce, probably. They said they can edit it a little, right?
Did I cut out?
So it was basically, this is where these, I think it was where these learning loops help. It's like right at that moment.
Yeah, sorry, my apologies. So these learning loops, we have a lot of wind here. My apologies, I don't know why. So with these learning loops, how good they become at understanding answers to the fundamental questions to understand if they have repeatability. And those questions are, if you take a look at every single sales methodology for the last 25 years, I haven't attended Mark's class, but I suspect a core of it is when you're talking to prospects, why should they be investing in the category of software you represent? Like, what value does it offer to them? What urgency? Why do they need to buy this now? And then the last one is, why are you the best solution to achieve those? I mean, in the end, those are the three. And really trying to get founders to put words to those questions to get repeatability is sort of the biggest sort of difference.
Well, to take a bit of a step back as well, because this is, I'm sure that a lot of these best practices that you're now also sharing with founders, especially about repeatability, like that's the name of the game, especially in B2B companies and tech companies. You have to find that repeatable customer acquisition process. You have to make unit economics work. CAC has to at some point work out when compared to lifetime value of customers. And it sounds like, you're both exceptionally good at this and you love the game from what I can tell. What made you want to go from being an operator to being an investor in the first place? And do you ever miss being kind of in the trenches and operating, or do you kind of prefer being an investor at this point?
I'll go first quickly. Look, I think operators always miss operating from time to time. There's no doubt. I think for me, the ability to have an impact with a number of people um, is sort of more rewarding than, say, me working at one company and helping it get to a certain level of result. That's sort of the most rewarding part of the job. The thing that Mark probably didn't speak to, but being an operator and having been there before, the journey from seed to A and beyond, it's not just building a go-to-market model, but it is a lot of therapy and mentorship to founders, because the company can go only as fast as that founder can grow. And there's only so much growth that can happen with the time and capital that you have. And so I think there's also an ability, to build a personal relationship with these founders. And if they can get to the other side where their business is successful and they're successful, I think it's incredibly rewarding, right? As an investor. It's not the model that all investors do, but I think it's the one that if you're an operator and you're becoming an investor, it's one that motivates you. At least it does for me. How about you, Mark?
Yeah, I think that's well said, Brett. I think it seems like why do VC, and would you go back in and do you miss operating? VC was a total accident for me, and in fact, like pretty much every win that I got in my career was a total accident. Like there's a long story of like I didn't mean to go to HubSpot, I didn't mean to go into sales, I didn't mean to write a book, I didn't mean to become a professor, I didn't mean to be a venture capitalist. These are all things that just kind of like presented themselves at a certain time in my life, and thankfully I had an open mind to consider them. And that was certainly the case for venture capital. I was perfectly happy teaching and advising and angel investing, and at the same time, since leaving HubSpot, had made a decision that my true north was to dedicate all of my professional time to mentoring and nurturing the next generation of entrepreneurs with their ideas. I'm a passionate entrepreneur, and I've been blessed with a gift of go-to-market insight. And that was my mission. And that's what led me to HBS, is a phenomenal platform to express that. And when Jay Poe was like, hey, we should start this VC firm in this particular way, because I had opportunities there's many different ways to join the venture ecosystem as a sales leader. Not everyone can do it in the way that Brett has done it, and maybe perhaps I've done it. Lots of times you end up as sort of what they call an operating partner, and those opportunities are available to a lot of folks. It's just one that I did. It just wasn't for me. It just seemed like I was kind of pursuing helping other people with their ideas and doing it in the way that they want to do it that I didn't fully agree with. So in a way, I was kind of like a free agent operating partner, so I could work on the ones that I wanted to work on. But then when I could do this on my terms, that was like really synergistic with my true north of being the firm that like brings together the entire platform to help folks with that. That's what inspired me, Joyce, to do it. And then do I miss operating? Not really. I think part of it's like what Brett says, like I personally just love working a lot of different things. I guess I have a little bit of career ADHD, and I'd much prefer, working on, a dozen or so at a time, as opposed to like 80 hours a week on one. And I think part of it's honestly like, what it takes, and it's like, I don't know if I have the energy for that. You know what I mean? Like, it's kind of like, asking a professional football player or basketball player when they're in their late 40s if they want to go back and play. Like, of course I do. I'd love to. I miss the crowd and the leadership and all that stuff, but I also know what it takes from an energy standpoint. I don't think it would be fair to the role. And I think I'm just much better fit coaching that, next generation. So that's just me, Joyce.
Well, a lot of what both you and Mark, what Brett and Mark had said really resonates. I think that there's something to be said for getting a lot of experience. Like even right now as a founder, I'm helping a lot of other founders with their go-to-market. So it's part of that coaching and having that repetition of having done it myself and seen it, and being able to do it for many companies as opposed to just one company is definitely very rewarding. The other part that I think is oftentimes perhaps not as appreciated is how much being a sales leader or salesperson really is effective, because it's the same motion that you use and the same muscles that you leverage for things like fundraising
It's so
or
true.
like
So
recruiting
true.
or a lot of this. So it translates into many different elements. And I'd imagine as an investor, and I've done this, obviously done the fundraising piece for my own startups. And as an angel, you don't really have to do as much fundraising with LPs and GPs, but as an investor, you do. And I would love to hear a bit more from Mark and Brett about what the process looked like for them to fundraise and kind of pitch, to pitch themselves and to pitch the funds that they were hoping to start, like with Stage 2 Capital and Bonfire Ventures. And I remember, Mark, you mentioned Stage 2 Capital now is already in Fund 3, so you've obviously been very successful in doing that. So any insights you can have about just the fundraising process of raising your own fund and how you leveraged your
Mm.
sales experience and your network to do so.
Yeah. Yeah, it's gosh, there's so much of like running a VC firm and like I don't know if I'm coming at it too much. You're always biased in your roots, but like it's like a sales team. You're like out there prospecting for deals. You're winning those. It's dramatically different in the sense that like you have to be really good at qualifying stuff out. Like the ratio there is extreme, and I think that's where a lot of operators struggle with because I've spent a lot of time with operators turn investors, and I've spent a lot of time with purebred investors, and I think they have their strengths and weaknesses. And one of the weaknesses of operators turn investors is they tend to like invest a little bit too much in problems because they know how to fix them, but without realizing that they don't have the scale or leadership leverage to actually fix them. But that's besides the point. So yeah, I mean the sales experience helped a lot with the fundraise. I whenever I talk to people who ran VC firms, I actually even for my class, I was wondering if the principles of sales, like challenger sale and spin selling and all those types of tactics, would apply to raising capital for a VC firm. And many of them were like, no, it doesn't. You're just kind of going with your pitch, and then it's you either get the money or don't. And I- from my experience, I completely disagree. Like I do a lot of discovery in the beginning of when I'm pitching an investor. Like as an institution, if I'm pitching an institution, it's like, yeah, tell me a little, they're always willing to go first. Like, tell me a little about your institution. Like, what percent of your allocations are toward alternative investments? What percent of that do you put toward VC? What fund cycle do you tend to come in on an emerging leader? How many new relationships did you start last year? What made you choose those relationships? Where are you in your fund deployment cycle? Are there any gaps in your diversification that you would like to fill? And they just talk about it. And it helps me figure out if I'm a good fit and if I want to spend more time, and also which aspects of our fund to lean into. So I just think like there is a lot of parallels to pitching for capital, to what we've learned in even like enterprise software sales, like probably a lot of the audience is from.
Brett, was that your experience as well, that your sales background really helped with fundraising for the fund?
Well, I was luckier than Mark. I joined Bonfire after they had raised their first fund, and both Mark and Jim were probably the most prominent B2B software investors in LA. And so I had the opportunity of joining them mid their first fund on like a probationary period to see like if this was going to work out. And then it relates to Fund 2 and Fund 3. Um, they have their relationships with LPs go back a while. I do meet with the LPs, but I will say, I do own marketing and I do own our sales decks. So if you go to our website, you look at our positioning, you look at the materials of our fundraising materials, I own those because I could not, because it is very much of a sales process. The other thing that we do that I own, and it's an interesting one, Mark, is VCs will tell a founder, send us your deck, right? Here's your deck, send us your deck. And then I'm like, oh, by the way, here's my deck. And they're like, what do you mean? I'm like, well, it's a two-way relationship. We're going to be with each other for 10 years. So you're pitching us, we should pitch you. And very straightforward. And most of them are like, this is weird. Like this is great. You've got a deck. Of course we should have a deck. Why wouldn't we have a deck? Less involved.
I love that. That's amazing.
Less involved. I'll send it to you, Mark. You can tell me if you like it or not, if it resonates. Less involved in the fundraising for 1, 2, more involved in more LPs and the rest of it. But you're always selling, right? When you talk to a founder, the way you engage with them is selling. I'm sure Mark is similar to us. I suspect on most founder calls, Mark doesn't say, don't send me a deck ahead of time, just talk for 45 minutes and I might say something at the end of it. I suspect Mark does what I do. Send me your deck, send me whatever you got, I will digest it and let's have a conversation. Because we're trying to sort of ideate together with the founder and understand in the back of our head, is this thing easy to sell? And founders are like, that was a weird call. And I'm like, well, what are these other calls you have? Now, the downside of doing that is, as a founder, sometimes you get so excited and you'll start riffing with the founder that you forget to let them pitch for 40 minutes to see if they suck at all at pitching. I don't know, Mark, if you struggle with this from time to time, because I'm like, oh, I can sell the shit out of this. But like, it's not me selling. I don't know. You're chuckling, Mark. I don't know if you
Yeah, for sure. I mean, it's we're honestly, Brett, like you're probably similar. Like we are willing to underwrite go-to-market risk, right? Like and not really underwrite product market risk. And that's like we could talk about that for a long time. Like that's a pretty important part of like our diligence cycle is because we're not a bunch of engineers, we need to make sure that this thing works and delivers value for like 80% of the customers. And we're unwilling to take that risk on.
Right.
But like if your CAC is too high, if the two co-founders suck at selling, like then what we're testing is like, hey, what do you think about bringing on a head of sales? Like, and we're that's definitely a cycle that we'll run, as I'm sure you do, Brett, as well, is like, getting extremely involved in helping them craft the right first sales hire profile, what they should be talking about in the interview process, and certainly be part of the interview, especially for the first like leader. And once you have a good leader in, it's just, if you write the right fit there, a lot of that stuff takes care of itself. But you're absolutely right, Brett. Like it's a totally different experience. And like I would say, like for a lot of founders when they're pitching VCs, and for folks who are considering being an angel investor as a sales leader, to stand out is you really can lean into your operational experience, because a lot of the VCs don't have that. They're amazing investors in terms of knowing a space, the competitive landscape, understanding sustainable moats, calculating TAMs, even reading founders and their ability. They're just like, they've seen so many, they are exceptional, but they don't have the experience that the people in this audience have in how to sell. And so I do spend a lot of time in my first call, if I'm trying to balance diligencing with them, with me differentiating myself, like asking them a lot of questions about their sales strategy, to the point where they are like, I don't know. What should we do? And then I'll just be like, here's what I think. And I'm hoping that I say something brilliant. And a lot of the times they're like, this is some of the best advice, said as humbly as possible. This is some of the best advice. This is exactly what we need at this stage. And that is an opportunity for us, Brett, for me, for the people listening to this that want to go into investing, to differentiate from the masses of investors. And probably why Brett and I invest at the stage that we do, because they don't have that know-how embedded in the organization yet.
Yeah, that's actually fantastic, and it really resonates because I think for any company, and if we think of, a new fund as its own startup and you're entrepreneurs trying to differentiate yourself, trying to, it's a two-way street, as Brett noted. You're pitching the founders just as much as they're pitching you. Maybe your pitch comes a little bit later when you decide you want to invest and you really want them to, take that term sheet, but you still have to stand out. And a lot of what I've noticed also is, it's becoming much more democratized. There are a lot more investors out there than ever before, which is great for founders. I mean, of course, right now we're in a little bit of a venture winter, as they say, but everyone acknowledges there's dry powder. It's just the markets are a little bit frothy. But there are more and more investors. There are syndicates, there are angels. A lot of the rules around even what an accredited investor has to look like and how much assets under management they has really changed the rules of the game. Have you found that to be have you found that to be beneficial? And also, does that make you have to lean into a differentiation of your own sort of sales acumen? And does that mean the types of founders who reach out to you are maybe ones who know they lack that, and that's why they might not be that good at pitching, but it's precisely because they want to work with someone like you who can help kind of coach them or improve or maybe help them hire that head of sales to augment their team's needs? So I know that's like multiple questions. I'll break it down into the bullet point questions. And number one is just, have you noticed that there's a lot of changes in terms of a lot more competition in the investing landscape? And number two, is your differentiation, just to sort of reiterate before, the fact that you have that go to market and sales background? And three, does that mean the types of founders who tend to vibe best with you are the ones who need that and therefore maybe lack it on some levels initially?
So I'll go first. One, as a former founder, it's good that there's more capital. On the other side of the table, I think being that there is a lot of capital has built a lot of bad habits at the early stage. Half my calls are people calling trying to raise the inappropriate amount of money for the progress they are at their company. And I try to give them just advice like, don't go do that, or don't raise from venture now, right? Because so that's one. Two is there is money and there's help. So, doing a party round with 30 individual angels, right, is money. And maybe you can get their time, but their job isn't, their job success is not tied to your success. And if you're in trouble, they're not necessarily doing a lot of pro rata. And so I would suspect as it relates to when people decide to invest with stage two or Bonfire, it's because we've built a good relationship with them. And when you think it from seed to A and you're building your board and you're building that first, what I'll call deep relationship with an institutional investor, if you want someone on your team that you trust, and you're going to call mostly when things suck, right? Like Mark and I don't show up at a board meeting every 90 days. There's no surprise. We know it's at the board meeting. We talk to them all the time, right? If you want someone like that, that's why you would pick stage two or Bonfire. If you just want capital, there's plenty of other opportunities. I I don't think, however, it just precludes us from investing in people that need a lot of help. The reality is, even second or third time founders, they know the ropes of building out a company. They're also a lot more self aware on where they're not strong and where they need help. And so I would say it's mixed between the two populations for us. Mark?
Yeah, as well said, Brett. It's a good question, Joyce. You know, I'll look at the question not necessarily from the perspective of like, when is a good time to be a venture capitalist? I'll come back to that, which is, I just think any time is, it's a different set of pros and cons. But I'll first approach it as a passionate entrepreneur. I want what's best for the ecosystem, which means entrepreneurial success, which means bringing innovation that helps our society, which means like having entrepreneurs find their rhythm and become successful. And I think 2020 and 2021 was possibly the worst time in the history of humankind for that. Like it was just, there was so much money out there and too many ideas got funded that shouldn't have. and almost everybody raised valuations multiple times higher than they should have. And it's going to cause a lot of ideas that could have positively changed society to never really come out and make that impact, which is so sad.
Yeah, we
And it's
didn't
going to
let,
set a lot of founders back,
yeah,
like an entire company life cycle, to
yeah,
finding their rhythm.
Mark,
Good,
sorry,
Brett.
but yes, we did not let teams and ideas bake enough. You raised these valuations and you felt
Crazy.
you had to prematurely scale. You got to
Yeah.
let them bake.
There's just like so much. I mean, hedge funds were coming in and giving people 50 to $100 million that had very little track record, if any, in software startups. Growth investors that had typically invested when companies hit 20 or 30 million in revenue were coming down earlier to businesses with a million in revenue, but not changing their playbooks that they had architected for. I mean, the list goes on just terrible behaviors for the ecosystem. And if you look at the return history of venture capital asset class, it bottoms out around a bubble, like the year before, the year of, and the year after the hype and burst. Like 2020, 2001, and 2002 were like so bad in terms of performance. 2007, 2008, and 2009 were so bad in terms of performance. But the times in between where you're recovering from bad times were amazing, amazing. And we're kind of like in that split right now. I personally believe that the 2020 and 2021 vintages of venture capital will be amongst the worst ever, especially in the Series B and above growth rounds where they had to pay and compete. And I personally believe that 2024 and beyond are going to be amazing vintages. And there's historical data to show that. So anyway, I was just really frustrated the last couple of years on what was happening to the ecosystem. And I'm actually really excited now because people are going back to the fundamentals that will bring great ideas to positively change our society. Um, from a venture capital approach, you just have to know what market you're in. Like 2021 is amazing um, for markups, like for follow-on capital, for growth. Like budgets are amazing, sales velocity is fantastic, and you just have to make sure you don't overpay, or you're going to fall into that negative vintage. You have to be really disciplined, and it's very competitive. And the war for talent is terrible. Um, but now it's the opposite. Now it's like there's the bad parts are like it's hard to get something followed on. There's not a lot of capital out there. It's not easy to sell anymore, so you really have to learn how to sell again. And you have to know where this is an interesting down market because I find it a little more vertically discriminatory, whereas like I felt like the last recessions were kind of hurt everybody. There are certain sectors like energy and hospitality that are just on fire right now in a good way, and there are certain sectors like growth tech that's just like really, really bad. So you just have to be really disciplined about where you're looking. But on the opposite side, valuations are normal, if not depressed, which is good for an investor. Competition's way down, which is great for an investor. Amazing talent is around. Like all the big ones are laying off and some good. So it's just like it's an amazing it's like the one of the best times to build a company. It's so good. Um so yeah, Joyce, I mean I think VC is like the best of times and the worst of times, no matter which macro environment you are. And the last part on your differentiation, yeah, like I agree with Brett. Like if you look across our founders, it's not a bunch of like 28-year-olds that don't know how to sell. I mean, we've got like 3 or 4 time founders in their, the later part of their careers. And, there's always new techniques that they need to learn. And also like, for us and for any VC firm, you've got a network. We've got 500 LPs behind us that are experts in account-based marketing, product-led growth, like building an SDR team, expanding into Europe, like you name your like desired knowledge, we'll find you the person that did it, right? So these are the ways that we differentiate for founders of all types.
Well, that's great. And so actually now a question about prospecting, which kind of blends together the sales piece and also the investing piece. One observation I had, I guess, is that it's become harder and harder to differentiate, to prospect, to kind of signal to the right founders that you're, open to invest and to stand out from everyone else. Like if you don't have many millions of followers on Twitter, and we all know that the Twitter algorithm has been changed a lot. If your handle is not Elon Musk, then you're not going to get nearly the organic reach you did before. So there's some combination of I will leverage a lot of my previous networks because I tend to invest disproportionately in companies that are based in other markets. There aren't a lot of investors who invest there, so there's a little bit of differentiation there, and obviously, like helping and getting a reputation for being someone who knows how to navigate go to market, and especially for those who are sort of industry or even geographically outsiders who are trying to break in. Um, that's worked, I suppose, for me on a small scale, but I'm curious for both of you, what is your prospecting technique? Like if we get into the brass tacks of it, do you have like Crunchbase alerts set up? Do you go to demo days, or do you try to outreach to them? Like what is the technique, and how have you used some of those sales prospecting and lead qualification skills and brought them into play in the venture investing world?
Mark, why don't you go first?
Sure, Brett. Yeah, so we have three probably unique approaches and one that I think a lot of people do. The first is probably not surprised, being the roots of my roots coming from HubSpot. Like we do a lot of content marketing, right? I do a lot of content marketing. I do encourage folks on that are listening to this, if at some point you want to get into angel investing or you want to get into investing, your own personal brand, what you represent in terms of like changes in go to market and your following could be a huge asset for you. And so we invest a lot there. I invest a lot there, and that yields lots. Probably a couple hundred deals a month just from that channel. Um, we did create a go-to-market accelerator called the Stage 2 Catalyst. We're coming up on our third year of that. So think Y Combinator, but like the next stage, right? So we had about 500 applicants last year. We chose 15 companies, gave them a couple $100,000, and put them through a 10-week course of everything to like build your first sales function, from how to hire your first salesperson, how to pay them, how to build an SDR team, how to build a content marketing function, etc. And so that obviously attracts a lot of deal flow. And the third one is like we have 500 LPs out there, right? We have the CROs like Snowflake and MongoDB and Zoom and Twilio, and they see the best engineers at these companies leaving and starting companies. So half of our deal flow and half of our investments originate from LPs. The thing that we do that everyone I think else does, which is I think great practice, is each of our partners has a major, right? So that's something that a particular theme that they're really interested in right now, and they're out there, in between working all the inbound stuff that we get, they're working that theme, understanding the landscape, and forming some, and just like cold outreaching to folks, and that we may even rely on our LP base to like lob in a call to a founder to get their attention. But yeah, those are some of the tactics we use.
Glad Mark went first. Venture is interesting. I try to apply as many of the demand gen practices I did in software to venture because I'm an operator. So I think we do similar stuff with Mark. I like to write at our firm. I'm less worried about like, look at me, here's some good content. My partner's a little more humble. So like, unless I can do some GPT plugin to represent them, I'm writing. So be it. Because I think the key is you just want to be in the good deals. You don't want to The worry is that I'm doing the best deals that I see, as opposed to the best deals out there. So we do a lot of content marketing, but it's primarily me. I'm on social. I do not comment on world affairs, okay? Because I don't think as a venture capitalist we know what's best for the Ukraine, or we're going to, spark some fear around whatever hateful policy people come up with. The whatever the neo-libertarians that hate everybody. So we don't do that. We do some outbound, right? So we do use tools to try to figure out who are the up and coming people, etc. So we do have folks. Unknown caller. We do have folks on our team that do a lot of outbound. The thing that we spend a lot of time is building really strong relationships with our pre-seed firms that are our source of deals and our A-round firms, because there are plenty of people that go to A-round that aren't ready yet, and there are plenty of people that our pre-seed firms that we work with would love to get into Bonfire because they see that they have a better track record of success. But it's something that I constantly think about as a former marketer and a sales leader. Like, there's more we can do here. Like, I ask myself, should I be camped out in Hayes Valley with 700 other people? At the newcomer AI event? Probably, but I'm 50. I'm just not going to do that.
Well, I think it's great to know thyself. And, on that note, I wanted to sort of wrap up with a couple of, some advice to everyone, because there are so many listeners who are themselves sales leader operators, who would love to become investors, I'm sure, or who do work with investors. And then I'm sure there are lots of investors who want to maybe become an operator or get better at go to market. So, what are some of the books, articles, resources you think are most helpful in this intersection of being an investor and one who's particularly good at being value add and founder friendly, especially as far as GTM is concerned? And how have you been investing in yourself in terms of your own upskilling and staying both relevant and up to date on the latest trends?
Mark?
You're gonna go, Brett. Yeah, so I did a lot of work in personal. I do a lot of work on personal development. I've read the books, I've read the blogs, I've talked to people, I've gotten formal education. uh, I think like the biggest bang for your buck, I believe, is actually following the rapid conversation online. And I like to just kind of get recommendations from people on like who are like, you even can start with like 5 or 10, and once you read those 5 or 10 people and follow them, they tend to mention other good people, and your list quickly grows to 100. So whatever you're wanting to dive into, whether it's AI or blockchain or crypto or whatever, like you can quickly find those people. And I would usually invest like 2 nights a week, like a Sunday and a Wednesday, to spend an hour just like reading that stuff, and then hopefully participate in the conversation. I find a lot of bang for the buck there, much more so honestly than books. And I'm sorry to say that as an author, but like I think a lot of books, you can kind of, if you hear about a good book, you could probably find like a 50 slide deck slide share or a 4-page article that summarizes the good
Or
stuff
you
of
can ask
it from a time.
ChatGPT to summarize it for
Yeah,
you.
exactly. Summers for you, you know what I mean? So like, but some of them are fun reads. I think the other thing that I've done through various aspects of like learning to be a sales leader, to be a professor, to be an investor, is to build a peer group. And I would go out, like if we just take sales leader, for example, and anyone could do this. I would meet, I think I had like 50 cups of coffee my first year with different heads of sales. And there were like 10 that I really enjoyed and wanted to learn from. And they happened to be more peers than mentors for whatever reason. And so I just got them together once a quarter for a dinner. And we did that for 8 years. And we just talked about like we just came to the dinner with the biggest problem we were struggling with, and invested time in each of our problems. I learned so much, and all of them went off to amazing things in their career. So that's just one I don't hear about as much, is like putting the investment in a peer group. And now that could be done on Zoom too, you know. But that actually um, was a really good investment of time for me from a personal development standpoint.
So I'll follow up and then close. I think everything Mark said on sort of personal was correct. The other advice I would just give people is, often people think of VC as this glamorous job where you're going to make tons of money. Let me explain something to you. If you become an early stage investor like Mark and I, you might break even in year 4 or 5 because you have to write checks as a partner in the fund. And the enemy of large returns in seed funds is the size of the fund. So you have to love the craft. You have to ask yourself, do I want to put myself out there? And do I want to work with a number of companies and be there with them as they grow that company? And I don't care what you say. If you're an operator or sales leader, when your companies bleed, you will bleed. When they lose a deal, you will wince. When they make a quarter, you'll be excited. It's a long journey. And the other thing just to understand is, my wife has noticed this. I do dishes. I do laundry. I do a lot of stuff around the house. And she's like, why do you do that? I'm like, it's very tactical. Something was broken and now it's fixed. In venture, I won't know. You know pretty early if it was a bad investor. Like, oh God. You won't know for 5, 7, 9 years if you're right. So it takes a lot of stamina and a lot of belief and a lot of compartmentalization. Just remember that. Because as an operator, you're going to care more than non-operators do in venture. And so that's just my one piece of advice for that, because I get I want to be in venture. I'm like, you do? I'm not sure you know what that means.
Well, thank you so much, Mark and Brett. This has been a fantastic conversation. We have learned so many best practices and tips and perspectives on the sales leader to investor. So thank you, everyone else, for tuning in to the Modern Sales Pros session, and enjoy the rest of the Supercharged conference.